Hey guys, it's Mike Watson with Keller Williams, and here's the monthly real estate market update for July 2022. We had 609 new homes come on the market, which is a 17% decrease versus June, which is pretty interesting going into the summer months. And to back that up, it's almost a 17% decrease versus last July. The number of homes that we had go into escrow was up versus June, but June was also very low, and it's 16% less than it was last July. I did a little bit of digging on this, and this July at 423 was the lowest number of homes to go into escrow in July, as long as I've been tracking the data, and that goes back to 2003. So that is super interesting. I know we've been watching that to see what the market is going to do, and how interest rates were going to have an impact on it, and we're starting to feel it now. And you can see it right here with the number of homes sold in July at 335, almost a 26% decrease versus June. Again, really strange for a summer month. 31.5% decrease versus last July. I did a little bit of digging on this one too, and this was the lowest number of homes to sell in a July since 2007. Long time. So the interest rates are for sure having an impact, paired with home pricing, but the home pricing is not coming down, as you can see right here. We set a new record high average selling price at $495,000 for the Antelope Valley. I do this, probably every couple months. I remind you that back in 2006, when the market was the highest it had been prior to this upswing, our average selling price was $355,000. So we are up tremendously. It's up 3.5% versus last month, and it's up 7% versus last July, and we're hovering right around 10% year to date on our increase in average selling price. The days on market, we're back to 30 days, which is a very healthy market, but it's up 34.5% versus June and up almost 95%. So effectively doubled versus last July. Last July was crazy with the days on, with everything was just going so quick. 30 days is a very healthy market. Anything under 120 days nationally is considered a healthy market. So we're still doing good, but that is moving up for sure. Our month's worth of inventory, we're just over 2 months now. That's a 10% increase versus last month, which you could see the number that we had come on the market and the number that we had go into escrow. We built inventory by about 11%. We're up almost 68% year over year. I've said this the last couple months that 68% sounds crazy, but 68% of 2.15, right? Not a huge deal, but it is a substantial increase. The 2 months worth of inventory, again, a balanced market nationally is 6 months. So we're still under that. It's still a market that very much favors the sellers. So the market is doing well, even though we've had, the low number of homes going to escrow, and a lot of that I attribute to interest rates, but the interest rates seem to have calmed down. This week we've been right around 5.5, just under that, which is about where we were at the end of April. Right when things started to get crazy. We're obviously not in the sixes anymore, but the Fed is still talking about raising rates, and I'm still hearing that we're very likely going to hit 7% and probably 8%. But we'll see what happens, right? They'll adjust the interest rates because they think that they're going to be able to control inflation with that. And so we'll see how that goes. Anyway, if you guys have any questions, feel free to call, text, or email, and I will talk to you soon. Have a good day.